and a Shay. We must unite. Now, family members and listeners alike, something that I want to bring to your attention is something known as passive income. And when you see the uber wealthy riding around, or floating around, I should say, on their yachts all around the world, and they never seem to be working and things of that nature, the reason is because they've got passive income. That's income that's coming to them, okay, and it ebbs and flows based upon how they position their portfolio at any given time, okay? So their money is working for them, vis-a-vis them working for their money. Let's take a look at that, shall we? The concept of passive income is certainly attractive on paper as you look at it, okay? As it involves generating regular money flows with minimal activity. However, creating a reliable passive income source is easier said than done, but the uber wealthy got it down pat. Some people look to business activities or real estate, rental income to generate steady streams of cash, but these approaches can take years to bear fruit and or profits, and require heavy investments in time and money, okay? Alternatively, you can consider investing in high-quality dividend stocks that will pay you to practice patience. But with so many great companies to choose from in the stock market and no shortage of dividend-paying companies, it might just be the easiest way to start generating passive income today. Interested in companies known for their consistency? Well, then it's hard to find a more reliable passive income source in the stock market than the dividend aristocrats. Now, once again, let me remind you what they are. Dividend aristocrats are companies that have increased their annual dividend payments in each of the past 25 consecutive years or more. That's the type of reliability that you, me, we, the beloved Asset Wealth Institute family can bank on for the long run. And some of the stocks that I'm about to present to you offer upside in terms of price appreciation as well. So, if you are interested in generating passive income with stocks, I've got 3 dividend aristocrats that you may want to consider for possible inclusion into your portfolio upon completion of the appropriate drill down. First dividend aristocrat I want to submit to you is Abbott Laboratories. Abbott Laboratories, symbol ABT. Now, dividend aristocrats are able to consistently return capital to shareholders thanks to their strong financial health that is driven by their powerful business models. After all, a company needs consistent earnings and stable free cash flow generation to even provide a dividend payment in the first place, let alone increase the payments each and every year. Abbott Laboratories, once again, what's that symbol? ABT, is a great example of the type of businesses that passive income investors should be looking for, as it's a diversified healthcare products company with a nice mix of new and existing products offering stable sales along with growth potential. Now, the company's main product lines include nutritionals for adults and infants, diagnostic systems, vascular implants, cardiac rhythm management products, and diabetic care products, which are sold directly to wholesalers, distributors, government agencies, healthcare facilities, and pharmacies. Abbott Laboratories also produces the at-home COVID-19 test kits that continue to play a vital role in keeping the pandemic in check, and have created an entirely new revenue stream for Abbott Laboratories. Finally, the stock offers some upside at this time, as elective procedures and physicians visits are on the upswing as I speak. This benefits the medical device businesses of Abbott, and investors have to love the fact that the company reported Q2 worldwide sales of $10.2 billion. That's up 35% on an organic basis. I said up, increase by 35% on an organic basis. You're talking about a company cashing in on this COVID-19 or COVID pandemic. Abbott Laboratories, symbol ABT. Next company I want to submit to you that will provide you with some wonderful passive income is Dover Corporation. Dover Corporation, symbol DOV. Now, we aren't shying away from conventional thought, but we're taking you up to a higher level, believe it or not, which is unconventional thought. And you have to ask yourself, why aren't more investors talking about Dover Corporation? It's a dividend aristocrat stock that is up over 38% year to date and continues to show relative strength in a mixed tape. Dover Corporation manufactures a broad range of specialized industrial products and sophisticated manufacturing equipment that play an essential role in tons of different industries, which means it's another diversified business model to get us P.A.I.D. on over the long haul, with operating segments including engineered products, fueling solutions, imaging and identification, pumps and process services and solutions, and refrigeration and food equipment. This company is easily one of the most interesting industrial companies to consider, just based on the sheer amount of end markets its products are used in. Now, Dover's dividend has grown by 8.2% over the last 3 years, and the company has boosted its payout for 60 years, 60 consecutive years, which includes this year. That is truly remarkable consistency. The company is also a nice reopening play, as its food and refrigeration equipment should see more demand as more people are vaccinated and head out to eat again. Family members, Dover Corporation had a fantastic Q2 that crushed earnings estimates, as the company delivered Q2 diluted earnings per share of $1.82, up 112% year over year on $2 billion in revenue. Family members, Dover Corporation, symbol DOV. And the third position I want to give you, that will get you P.A.I.D., is Kimberly-Clark Corporation, symbol KMB. Now, if you are indeed a dividend investor after high yields to maximize your passive income, Kimberly-Clark Corp stands out as a potential buy thanks to its 3.26% dividend yield. And we most likely would like to have a 5% plus dividend yield. But I'm going to make an exception for KMB because of the following. This company has a history of 49 consecutive years of dividend raises. It's a leading consumer products company with a portfolio of some of the strongest brands in the world, including Huggies, Kleenex, Scott, Pull-Ups, and Kotex. What's nice about consumer staple stocks is that they tend to hold up well in almost any market environment, since they offer products that always see steady demand. The company is currently working to combat inflation by raising its prices and reducing its operating costs, which are both moves that could end up paying off in a big way over the long term. There's also a lot to like about the recent price action for the stock, as it has reclaimed all of the major moving averages with authority. Adding this dividend aristocrat for passive income could end up being a great idea, as the stock may be in for a strong finish at the end of this year, 2021. Family members, 3 powerful positions that will allow you to have passive income on a consistent basis.